So in terms of tax to pay, what are the key sort of taxes people should be aware of when they're employed or self-employed, and then also for their business?
Employed, first of all, obviously, there is your income tax and NI. So many people think, they'll say, oh, the tax is so much. Your tax on a pay slip is actually a combination of two things. It's a combination of your income tax and your NI, your national insurance contributions. This is what allows you to be eligible for benefits like the state pension, maternity, sick leave, all of that kind of stuff. If you haven't paid enough, then technically you can't draw down such services. But anyways, that is what NI is for the NHS, those kinds of public benefits. And so that is paid at 6% and 8% for self-employed and people who are in 9-to-5 employment. And then you have your income tax, which is where we talk about being in the low tax bracket, basic rate tax bracket, higher rate tax bracket, and additional rate tax bracket. This is the 20% if you earn anything below 50,270, and it's a 40% for income that is above 50,270, but below 100,000, or I should say 125,000. I'm not going to go into the complexities of what happens at 100,000. And then your additional rate tax player for people who are earning 125,000. So that's where that falls into. So somebody might say, I'm earning 50,000, for example, and they might do the calculation and do the 20% and realize that actually, but more has been taken from their salary. That's because of the NI. So just to bear that in mind, that's for you. If you're an employee and your payslip, if you have a look, you will be able to see that. And like I say, in my Money Foundations course, all of this is explained for people to understand how pay and tax works. Money Foundations, if you need more help on that. And then in terms of being self-employed, the tax that you need to pay is still income tax and NI contributions. However, it's calculated separately. So rather than it being a case of, oh, your salary is 50,000, then they take the income tax and whatever, and you get whatever is left over. What happens with self-employed is that you have your income from your business, you have your business expenses, and then they take your NI and your income tax from whatever is left at the bottom. And for those two, you both have personal allowance, 12,570, which everybody is eligible to have, that you don't pay any tax on. That means if you literally earn 12,570, you will pay 0% tax, but you will pay NI. So just to remember what I said about the tax being in two different bits. You start to pay NI from about £6,000, £9,000 onwards. So you will pay a percentage. And then coming to the business owners now, you've got your corporation tax. I'm sure many people have heard of corporation tax, and that is your 19% tax on profit. Now, you see how when I did the self-assessment income or the self-employed income, I said business income minus business expenses and then your tax, right? With your business income from a limited company, it's a similar thing whereby you have your business income, you have your business expenses, you have your tax, and then you have your dividends if you wanted to take out money. If you have been taking out a salary or something like that, salary is a valid business expense, and that would be in the bit. But if you don't have a salary, you're not doing pay slips or anything like that, you will pay your profit, and then technically you are eligible for your dividends. So 19% on profit. Someone said to me one time, oh, but my business, only earned this amount. Isn't there some kind of tax-free allowance? The employed people, we earn 12,570 without having to pay tax. No, that doesn't work on limited company. Even if you have a profit of £1, you will pay 19% tax on your £1. So you will pay 19p tax. And best believe if you don't pay that 19p, they will turn it into a £100 fine. So yes, that's how it works. But having said that, like I said, there are things that you can potentially do to help with that tax bill. Another thing to bear in mind is that if you have profit over £250,000, I have not reached there yet, but I wish I could be there.
I'm sure you'll be there soon.
Amen to that. But if you do earn profit over 250, then you will be paying 25% tax. The bracket goes up from 19% to 25%.
So this is for the business?
Yes, for the business owners.
So something's just come into my mind because I've heard this, especially young people mention this. in terms of tax brackets and earning. You know, I'm going to try and keep my salary low so I don't pay a lot of tax. And, you know, I think when someone's starting a business, the aspiration is to be able to generate, for the business to generate as much income and revenue as possible. What would you say to someone who's thinking, you know, okay, 250,000, I'm going to be taxed more, so I'm just going to try and keep the, you know, that revenue low or the profit low? What would you say to somebody who's thinking that way?
So there's two things I would say. Number one, I would say, and this is across board for business owners and even employees, £1 extra that you have that is taxed at a higher rate is better than zero. So what do I mean by that? You've earned £50,000 and yes, you are taxed at 20%. If you earn another £10,000, now your salary is £60,000, please, number one, recognize that it's only the 10,000 that will be taxed at 40%. I believe if you have the right mindset, you need to understand that £10,000 tax at 40%, leaving you with £6,000, still puts you in a better position than only earning £50,000 taxed at 20%. At the end of the day, I can go on holiday with my £6,000. I can invest with my £6,000. I can pay off some debt with my £6,000. I can do many things with £6,000 than you capping yourself at 50%, at 50,000 because you don't want to pay higher tax. And it's a similar thing with business. At the end of the day, thousands of pounds more tax at 25% rather than 19% is still better than you capping your income and saying, I just want to pay 19%. Having said that, there are things that you can do as a business owner. Even when you earn millions of pounds. Number one, you can give some of it to charity. Not all of it, but some of it. Number two, there are other ways that you can spend. And the key thing is that you want to be spending back into the business that will help you to earn more money. So for example, why not take your staff on training courses? Why not, do charitable donations and projects? Why not do, food banks or something? Why not buy new laptops for your office? Why not get a new building space? All of those are expenses that will help to reduce your profit. So that way you're still earning £1 million, £2 million, but rather than just leaving the money sitting there, you're starting to invest back into your business. Why do you think that these £1 million companies have such flashy buildings, flashy this and flashy that? Google give their staff free breakfast, lunch and dinner. You don't have to pay for it. Who do you think is paying for it? Why do you think that they're so happy to give them free this and free that? And I'm talking proper breakfast, proper lunch, not cold sandwiches.
Or a croissant.
Or a croissant, exactly. Proper breakfast. Who do you think's paying for it?